Welcome, dear traders. You are watching a recap of the Asian session. Asian stock markets jumped following strong gains on Wall Street. Australian equities surged to monthly highs thanks to a rally of mining, energy and financial companies. What triggered such a rise? What trend dominated forex? Watch our video review and find out the answers. The main driver for such a sharp increase was the earnings reports of large US companies. Tech, financial and energy companies posted strong quarterly results. Moreover, corporate earnings turned out to be much better than expected. It boosted risk appetite. As a result, 8 of 11 the sectors included in the S&P 500 index closed in a positive territory yesterday. The Dow Jones hit two-year highs. Apart from a positive earnings reports, strong economic data facilitated a rally in the stock markets. Core inflation in the United States is declining and consumer sentiment is rising. American consumers still tend to spend money more than saving it. It increases the likelihood of a so-called soft landing, so recession risks are easing. Speculators anticipated dovish reversal. Curiously enough, the US dollar climbed slightly despite an improved risk appetite, and the fact is that consumer confidence turned out to be below forecast, affecting market sentiment. The US dollar took advantage of this. The US currency retreated from its 15-month low reached in the previous session. It even managed to break above the resistance level of 100 points, and the fall in the US dollar slowed amid the weakening euro. ECB policymaker Klaas Knot seemed rather dovish. He said that rates would rise this month, but that anything beyond July is by no means a certainty. As a result, the euro rolled back from its 17-month highs. Yet the greenback will hardly start a steady rally. It's now trading at lows versus its main rivals. In Asian trading, it was moving in the upward range of 99.90 and 100.30. The yen lost ground due to a rise in the greenback. It returned to the weekly highs and even hit the resistance level of 139.70. The second reason for the reversal was the Bank of Japan's monetary policy prospects. Yesterday, Kazuo Ueda said that there is still some distance for Japan to see inflation to stably meet the Bank of Japan's 2% target. It means that there will be no shifts in the monetary settings. It's a downside factor for the yen as other central banks are committed to aggressive tightening. Besides, risk appetite limits its growth as a safe haven asset. Therefore, the yen will versus the US dollar in Asian trading today. On a Wednesday morning, the yen-dollar pair was trading mainly in the range of 138.70 and 139.70. If the pair rises above 140, it could undermine bearish sentiment and force speculators to close short positions. The Australian dollar also lost momentum after an increase in the US dollar. At the same time, Aussie ignored not only encouraging data on the Westpac Melbourne Institute Consumer Sentiment Index, but also a surge in a risk sentiment on the stock exchanges. In the Asian session, the AUD-USD pair was moving in the bearish channel of 0.6765 and 0.6822. The former monthly support level of 0.6800 turned into resistance. The Aussie reached its weekly low of 0.6780, broke through 0.6770 and rolled down. Thus, the peers continue to push the Aussie to the levels of early June near 0.6740. The bulls need to defend 0.6900 to resume an uptrend. The New Zealand dollar advanced amid inflation data. Consumer prices in the country totaled 6%, although they have fallen slightly over the months. Inflation is still far from the target level. The Reserve Bank of New Zealand is likely to remain hawkish. It helped the Kiwi rise against the US dollar. However, its growth did not last long. The Kiwi slid in the downward range of 0.6225 and 0.6316. In addition, high inflation increases the recession risks, so in the Asian session, the Kiwi lost ground, trading at 0.6552. That's all for now. Do not miss our next video reviews. Leave your comments down below and see you soon.